Hello guys, it's Max here from Daily Market Movements, and just before I start today's video I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website www.dailymarketmovements.com. The website link is below this video in the description. Once on the website you'll see that we charge a very small fee of $199 for a year's membership. So in front of me is gold over the US dollar chart, and as you can see today we've had a bullish day. The market has done once again exactly what I said it would do. Yesterday we did have a slight dip below this ascending triangle, the bottom side of the ascending triangle, and we tested the 50-day EMA. When we was at the 50-day EMA, I said that banks and hedge funds are likely to jump back into this market, as well as many retail traders to then support and buy this market so that it re-enters back into the ascending triangle, and that is exactly what has happened today. We currently find ourselves trading at 1711. As long as we're in this ascending triangle, we are healthy. I have no interest whatsoever in shorting gold. The fundamentals and the technical patterns all point to bullishness for me. I think that the all-time high will be coming into play very, very shortly, which is at the 1800 level. Sorry, not the all-time high, the 8-year high. And then the all-time high, which is around $1,900. I reckon that we will definitely see that before the end of the year as well. Central banks are printing money every single day. We have Donald Trump escalating trade tensions with China. We have the coronavirus. There's still a potential of a second wave. There's so many fundamentals out there. Interest rates around the world are near to zero, if not in negative. There are so many fundamentals supporting the gold markets right now, and also the technicals. One thing that I will highlight is that gold likes to move in stages. Here we are back in 2018. As you can see, we had a nice bullish run up here, and then as you can see we created a bullish flag which we then later broke out of, and as you can see we then continued our stage to the next level, and then here we had another stage for about a month and a half, and as you can see we formed another bullish flag, and what happened, we broke out there after 2 months, and then once again we had another bullish flag. This one was a lot longer though, but eventually after 2 or 3 months we then eventually broke back up towards the upside, and once again we then come into contact with another stage which also was a bullish flag. And as you can see, the market then broke out. And then obviously we had that large volatility when we had the huge stock market sell-off back in March. So that did create a load of volatile markets. But however, we did find support around the 200-day EMA, which once again has created a massive bullish flag. This is more like a triangle-shaped flag. But once we do break out of this bullish flag / ascending triangle, we are then likely to go and target the 1800 level, which has been my yearly target since January, when we were trading back down at $1,500. So I don't think it's a question of if, I think it's a question of when. So what to look for on Friday? Friday we have some very important news being released. We have the non-farm payrolls. Now, as I mentioned in yesterday's video, we had the private payroll numbers come out. Wall Street was expecting 9 million, so a loss of 9 million jobs. However, there was only a loss of 2.7 million, which is a huge miss, which is why we had a sell-off yesterday in gold. Obviously, gold wants bad news. It wants the US to do bad, as it is the reserve currency, and as you can see we did sell off. Tomorrow we have the non-farm payrolls, so this is the public sector, and if there is a miss anywhere near to the extent of the losses that we saw on Wednesday, this could be very bad news for gold. So if you are in profit and did get a perfect entry around that 1700 level, do put your stop loss at break even or slightly in profit ahead of tomorrow's news. That's something I would advise, as we could see some sharp selling off and potential another retest of the 50-day EMA if there is a huge miss. However, if there's not a huge miss and it's in line or even better, worse than expected, then gold should surge up towards that 1740 area. So do expect some sort of volatility tomorrow in the gold markets, and do be wary of that data which is coming out around 1:30 p.m. UK time. But going into next week, I do believe that gold will grind its way slowly back towards that 1740, where we have found resistance in previous trading weeks, as I'm highlighting on the chart now. But nothing's really changed for me, as I mentioned before, the technicals and fundamentals are still there. I'm extremely bullish for gold. And as I mentioned earlier on in this video, 1800 is only a matter of time now until we trade towards that very important psychological level and historic level as well.